Do you have what kind of phone do you have, Casey?
iPhone 7.
That's why it's weird. All right. I think we're getting live on multiple screens here. We are, if you want to expand that, Bob. Yes, buddy. You're the man. So we are here at Beth Brokaw's office, the Brokaw Group, and we have a couple special guests with me, and we are here for the Epic Mortgage Real Estate Q&A live on Facebook, and I have Bob with me from Beth's Group and Casey. All right, Bob Weicker, I want to ask you real quick, just to get a little bit of introduction. What got you into real estate?
What got me into real estate? I used to do a lot of remodel projects for myself, home improvement projects, and even flip houses. So that kind of got me interested early on. In my former life, I was a restaurateur. I owned a restaurant for many years, and when it was time to transition, that was the natural fit for me.
Perfect. And what do you love about it at this point?
What do I love about it? I think mostly the interaction with people, helping people reach their goals.
Yeah, that's good. I love that as well. All right, Casey, now you're on the hot seat.
Yeah.
What got you into it?
Beth got me into real estate. I've been working with Bethany Brokaw since I was in high school, and just I've always admired her success, and I felt like if she could do it at a young age, so could I.
Awesome. And then, what do you like about it so far?
I love, again, interacting with different people. Every time I meet new clients, I'm just always overwhelmed with happiness.
All right, cool. Well, today we want to talk about a topic that actually makes a lot of sense with what Bob said. Rehab loans. And there's a lot of reasons that this is a great thing for someone to use to purchase a house today. We're going to talk about not just the loan part, but the real estate side as well. So we'll go over the topic a little bit, and then we'll take some questions and answers. We do have several different streams, like my page, her page, Bob's page. The Epic Mortgage page isn't going right now, which kind of stinks. But anyway, we're going to do a few things about the program, and then we'll take some questions. And Steve's with us today, and not Zach. So he'll be trying to see what those questions are. Real quick, what's the housing market like today? I think this kind of leads into why people should do this. Either one of you want to answer that?
Market's strong still. Very much a seller's market. It's tough to find properties to do flip houses with. There are rehab homes out there. There are plenty of homes that need work. So no shortage for what you're doing.
Well, I know, Casey, you had a client that we're working with as well that recently tried to shop for a house. How does that go right now? People are trying to shop for a house because of, the amount of sellers versus the amount of buyers and all that.
The homes were actually not limited with their budget, but it was easy to find her a house in her price range in a rehab house. It was definitely a rehab house. But.
Okay, so when we're looking, I know a lot of people come to us and they start telling us what we want, which is fine, but obviously that's the realtor's issue. But are there a lot of, I hear people saying they put offers and offers and offers. They ask us for pre-approval letter updates all the time. Why is that?
We went through a couple homes, we were outbid. A lot of investors are buying homes and buying them up quickly. So,
yeah, because that's what I hear too. Before I put the bid in, or I'm at the house looking and my realtor got a call that said the house was already sold.
Yeah.
Right.
And they're listed and they're sold. Does that happen?
A lot. It's happening a lot, yeah. Just shortage of inventory, just not a lot on the market right now. Makes it tough. So it's hard on them, hard on us too.
Regular economics 101, right? Supply and demand. You would say we have a greater demand than we do a supply.
Absolutely.
Okay, so that's creating that problem. And it actually creates a problem in the market generally, which is what we're talking about today, but it's sometimes when that causes values to go up, but there's no market data to support that, so the appraisals are hard to get to be at that level. We had a couple come in low recently that we know of. So that's what we're seeing on the market. I'm seeing as well, houses flying off, and then what are buyers' expectations with most buyers when they come to you and they want to find a house? What are they're trying to get a house. A lot of them don't want to do work, right? They're just like...
Oh, no. The majority of people don't want to do anything. They don't. So they just want to move in ready and...
Turnkey.
Let's go.
All right. So, and that makes it harder because there's less of those than the buyers for sure. All right. So one thing I want to say is that we've all seen the shows on TV, the TV flip shows. Not the ones or the nightmare ones. That's the don't do it yourself kind of thing. But like there's the Chip and
Joanne.
Yeah. So my wife's uncle and aunt just went down to her place down there and the bakery and all that stuff. It's crazy what they've done in only a couple of years. Being on TV helps, right? But they do it where they fix it up for the people and they turn really pieces of junk into like immaculate dream homes, right?
Yeah.
True.
Just having a budget, having professionals help you out.
Having a budget.
So yeah, for sure, and people who know what they're doing. So that's what kind of leads us into this. There's a lot of shows out there like that, and that one being just one of Property Brothers as well, right? The one brother finds the house and tells them this is what you could have, and then the other brother comes in and does the work. So we've seen that. Real estate shows aren't always super realistic, but that can happen if we do it right. So that's what the 203K loan is. Really, we're talking about a rehab loan. There is a conventional program. It's just not as prevalent, and honestly, it's just a little more difficult. But the FHA loan is really good because the real issue there that you would really go toward the conventional is just a loan amount, because FHA is going to limit you to, it's not even get to 300. It'll be 285 in that ballpark. So, a lot of the houses are under that though, that people, that you can purchase and turn into a dream home. So the majority of the market will fit into the FHA is what I'm saying. So we're going to concentrate on that just because it's the primary one in the market, and that's the one that you guys have heard of or dealt with. So just to give you a little background on that, what we're doing is you're getting a loan to purchase the house, which could be $100,000, and then you're getting money toward the rebuild or the reconstruction, I guess I should say. And that would be, let's say it's $35,000. So now you have a loan based on $135,000 in total cost. There are some extra costs because there's two levels. There's like, I don't know if you guys have heard the term streamline, or if it doesn't really matter to the realtor. It's just we're getting a 203K. But to us, there's a 203K streamline, which it limits the amount of money you can get to like $30,000, and it limits the type of repairs you can do to non-structural. Like you're not going to rip off and redo a roof. You're not going to add a bedroom. You're not going to be able to do like major anything underground, basement work, foundation stuff. But I mean, $30,000, you can do a lot, right? I mean, so you can do new windows, new siding. You can't move walls generally, but redo the kitchen. That's a big one. You guys would say kitchen's probably the best for value. So, and bathroom would be probably second. So you can do that stuff. I mean, you can do a lot with that. You can turn a lot of homes that you would walk in and go,
So is it up to 30,000?
On the streamline, yep. So then the one that releases all those contingencies, basically those restrictions, is the full 203K, which that one's going to allow you to do the structural stuff, the moving the walls, if you want to add a bedroom, that kind of thing. But the thing with that is you have to have a third party, and that's going to cost a little bit of money. Let's just throw out a number of a couple $1,000s. It depends, but let's just assume that. And there's some added fees that you won't see. The mortgage rate is going to be a little higher, but the way we handle that is you going into it, you just know the whole picture. I'm going to do this 203K. The rate's going to be higher. I'm going to borrow the money. The house will be done within 7 months, probably sooner. Most people will be done in a couple. But after that, I'm just going to refinance to a better rate is what most people plan on doing. You might have built equity. You can refinance maybe to conventional with no PMI maybe if you do it, if it's a good enough deal. And that's what these guys are here for. Your realtor will find you hopefully a really good deal that if you put in $30,000, it's actually worth $50,000 more than you paid or something like that. That can happen. But obviously, the market the way it is, doing something like this to turn a home that maybe not as many people want, because everyone else is walking into that home and saying, look at this, look at that. They're all walking away from it. That's why there's no bids on it. You put the first one in, try to get a good deal with this plan. So the 203K it's people think it's like a tough, terrible deal. I mean, we can do it in 45 days. I've done it. Most of the time we ask for 60 up front, but I mean, you can do all kinds of repairs on it. And like I said, it costs a little bit extra. We can refinance and we can take care of some of the long-term payment issues. Another thing to point out is that the repairs are done after closing. So you own the house. Like we're going to close, like Bob or Cayse, whoever your realtor is going to find you the house. What we want to do first is get right away before you put a bid in. I suggest people wait. But the times that our loans take a long time, that you've probably experienced too, is when the lender doesn't have the bid and the stuff from the contractor up front. Like when they don't have that, then that's when you're kind of looking at it. You're kind of at a spot of a delay because now it's like get the contractor out there, and everyone who's dealing with contractors right now knows that they're all like there's a glut of work and not a glut of contractors. So Bob finds your house, Cayse finds your house. You say, I think I want to do this with some repairs that can be my dream house, and then you just go in and you get the contractor out there.
Like during the home inspection period?
Yeah, exactly. Well, actually, I would do it before contract. I would tell, what I would do is, and I'm sure what Bob would do for you, Casey, they would call and say, hey, Mr. Listing or Mrs. Listing Agent, we have a customer who's definitely interested in this house. But what we want to do is we want to wait to put the bid in just to make sure we know how much it's going to take to get it to where they need it to be. And what you probably should do, to be quite frank, the first step, if you consider this with one of your agents or with your agent, is to talk to a couple of contractors first and get one that's willing to work and do it quickly. So you can say, if I find a house, I need you to be able to come look at it with me within 48 hours. So then Bob, Casey, whoever is able to tell you, the other agent, hey, we're going to get this contractor out for a second showing, tomorrow or the next day, where they will give us the amount, and then by the end of the day, we should be able to put together an offer. So a lot of times the agents will respect that, and they know that something serious is going on, especially when you come through with that person. So
now, does that have to be in writing, the streamline one? Does it have to be in a written estimate or bid?
For us, yes, but but not up front. Actually, I should back up. The contractor can just give them basically just like a rough, like, okay, you want to do this, you want to do this. I'm not pricing everything out, but I could probably do that for $30,000. I could probably do that for $20,000. Then that gives us numbers where Steve, Mike, or myself in my office will be able to crunch those numbers to be able to say, okay, here's what your payment would be and everything, and yes, you qualify for the loan amount based on those numbers. So that's what I would do, and then you put the bid in, and then you put the offer on the house, then we get the actual itemized bid, and we handle the rest, like what the contractor needs to do, what the borrower needs to do, paperwork with the realtors, all that we handle, we get in, and if we do that, and when we put the offer in, we know that maybe the contractor has everything written down he needs to do, gives you like a rough, and then you say, I put the bid in, it looks like it's going to get accepted, start putting together the itemized details. Then, man, it's like a couple days after the offer's accepted, we have the bid, we start rocking and rolling, we get that thing done. So that's the way that you can have your realtor and your mortgage loan officer working together. It's all about doing it together up front. Like early on in the process, what can you do up front? So if you think you want to turn a plain Jane home or a junkie home even into your dream home, it can be done. You just want to do the right things up front. And I think having your agent, as they're looking for houses, getting a contractor lined up and committed to 24 to 48 hours after you like a house to go with you to a second showing, that's like perfect. And then just being able to tell them what you want. And that first showing, you do want to write down, if you're walking with Bob and listening to him pointing out stuff, or listening to Casey point out stuff, whoever you're working with, just make that whole list so when the contractor comes, you're not wasting their time, but you're able to say,
sure,
let's go room by room. I need this, this, and this. I need this, this, and this. And we get through it. Then as you have an inspection, there might be other things that come out, but I mean, as long as we have that head start, we can close quicker.
Okay.
So you borrow the money for the cost of the house, you borrow the money for the rebuild, you close, the work gets done. It's a pretty good process, and everyone's scared of it on the real estate side or the mortgage side. Like some companies don't want to do them, some real estate agents don't want to touch them. But I mean, if you get a good hardworking agent like one of these two, I mean, they're willing to go find you the right house and have the vision of what it could be. So
that's important too. That's an important part of it. Future value.
Correct. And well, that's that's something that does matter on the loan side too. So it's actually, what time is it? 2:04. So we got about 10 minutes left. So let's do some questions. And if we get done within 10 minutes, that's fine. Let's see, it's hard to watch all three phones, but we got Steve here. Steve, do you have a question lined up for us?
Yes. One of the questions, kind of a two-part question. Do I have to hire a contractor? Can I do it myself?
Yes, they require a licensed contractor, and it cannot be you, even if you are licensed. That's unfortunate, but that's the reality of the thing, because they're giving you a lot of money. It's actually HUD's rule, FHA's rule, not ours. So they're giving you a lot of money. They want to make sure that it's someone that's licensed and reputable to take care of the work.
Okay. Does the house have to be in really bad shape to count for this program, or what kind of condition does it be in?
All right. So good news for these guys. They don't have to only show you junky houses. They can show you a house that's actually move-in ready. Someone could actually get a move-in ready house and just say, I want to upgrade. You guys have probably shown a lot of houses where the same owners own the house for 30 years and the same wall coverings and window coverings and carpet is in the house, right?
Yeah.
You got any funny stories about that?
Absolutely no.
The same cat smell is in the house.
Yeah, right.
So no, you could actually get a house like that where you just want to make it look nicer, or you can get a house that's perfectly nice, but just, you know what, I think we want new counters and new cabinets in the kitchen. 10 grand, we want that. Okay, let's do a 203K. Can be done.
Kind of an open-ended question. How does the appraisal work itself?
Yeah, so the appraisal, as Bob mentioned, future value. So the appraiser needs the bid. So that's another thing that slows us down. I order the appraisal, or my company orders the appraisal, generally as soon as we get the PA with the purchase agreement. Sorry, I'm talking mortgage and real estate talk. Purchase agreement. As soon as we get that, we get on to the ordering the appraisal. And usually the inspection gets done before the appraisal. If there's a problem there, we can halt it. But usually the appraisal gets done right away. But the appraiser in this case has to have that bid, the itemized bid. So what he's going to do with that is going to give a value as if, okay, I'm looking at this house, but what if the kitchen was upgraded? Or what if the bathroom was upgraded? Or what if there was a 4th bedroom and it was a 4-bedroom instead of a 3-bedroom? Just like Bob said, the future value matters in this case. And it has to. So on an FHA, you need 3.5% down. So if the house is 100 and you have $40,000 in repairs, and you want to base your loan on that, you have to have a value after it's done of $140,000 generally. I mean, there's a couple ways they do the math. Sometimes you don't have to necessarily, but that's just the best way to assume. Like, you wouldn't really want to put $40,000 into a house and not have it go up $40,000 anyway. But that's how that works.
2-part question for this person as well. Are there a lot of homes, in the market that would qualify for this type of program? And then she also wants to know if appliances can be rolled into the cost as well.
One of you want to hit the market?
Definitely, always homes out there that could use this program. Always need appliances, carpet, paint, all that stuff.
Yeah.
Yeah.
This
So
can always be updated.
So there's, you guys, I'm sure you've seen pictures of houses that you thought were awesome and got to them, they're not what they
Oh, yeah.
So there's a lot of those out there.
Right. Yeah.
So,
Pictures
And
lie.
styles are always changing. People want different things all the time.
Yes, she's already going toward it doesn't have to be a piece of junk. We can get a nice
Right.
house and upgrade it. That's right. People forget that. That's important. But yes, appliances can be rolled in. So they can be part of it. So what they have to do though is they have to, technically they have to get a purchase order. It doesn't have to be like you're not purchasing the thing, but I've done it before where they went to the ABC warehouse or Best Buy or any of them, and they said, I want this LG thing, can you do a write-up for me so I can put it on my loan? So they just get an invoice that says LG model such and such, and it's this much money. That's it. So they turn in a couple of those, and then the contractor, you can do that, or if there's a contractor doing everything, the contractor can just put that on their bid. I've had that too, where they said, this model, and here's what it costs.
So we have one more question here. It was kind of already answered a little bit, but how much, is there a cap on the loan, the repair amount? Is there a ceiling to how much you can borrow?
Well, there's the one for the streamline. The other one, I mean, theoretically, no, but there's a cap on FHA as far as what the mortgage amount could be total, like I said earlier, and there's also what you qualify for, obviously. They're not going to let you tear the house down way past where you need to, like down to nothing and rebuild. It's not like one of these lakefront communities where people buy a house for a couple $100,000, tear it down and build $1 million house. They don't let you tear stuff down and rebuild completely, but theoretically, no. I've never really seen more than like 70 grand, but I mean, if anyone wants to try to go higher, we'll do it and we're fine.
Someone else piped in, it's not really a question, they're just saying, where can I go to sign up?
So, obviously you can call us at Epic Mortgage to get you pre-qualified just to see where you're at. You just want to tell one of our guys that you're talking to, this is what I want to do. I want to buy a rehab loan. And then you can also talk to, or you can talk to your agent first. You can call one of these guys here at the Brokaw Group. And again, that's Bob and Cayse. And obviously I'm Jeff, so with Epic Mortgage. So you can call, usually they'll even tell you it's good to have your mortgage stuff set up first because they don't want to show you a $150,000 house and then you're only approved for $100,000 and then it kind of puts a sour tone on the whole thing, and you're disappointed. So
Right.
figure out what you can do first, even before you're going on the many websites out there and looking at all the homes and falling in love with them. Figure out what you can do first, right?
That's first step,
Right.
for sure.
And then, what's your guys' phone number here at the office?
810-600-2060.
All right, and ours is 810-606-1075, and we do state of Michigan and Florida. We have some partners, other divisions that do other states. We have lots of other states, so if anyone sees this from another state and has questions, we can hook you up with an office that has licensed loan officers in that state if we do not. So hopefully we can help you guys out. Hopefully it was educational. If you have any other questions, you can also message me, message one of these guys, send an email, whatever you need to do. We are available for you. So that's going to be it for us. Thank you guys for being on.
One more thing.
Yeah, one more thing.
Yep,
Awesome.
we can help you find an agent out of state if you're out of state.
Oh, that's true.
Oh.
Just like I can help you with
So
a
make
loan
sure you
officer.
give us a call.
Cool. Yeah, so we just want to help people. So if you're in New Mexico, we don't do loans in New Mexico, they don't do real estate in New Mexico, we will find someone that comes highly recommended for you to do so. So
That's right.
Perfect.
thank you very much, and Steve's going to be ending this. Thank you, and have a great rest of the week.